Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is February 28th, 2025, and we're diving into the latest earnings report from Owens Minor. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Owens Minor, a global healthcare solutions company, has just released their fourth quarter and full year 2024 financial results. There's a lot to unpack, so let's get started.
Revenue and profitability overview. Let's start with the top line. Owens Minor reported a net revenue of $2.7 billion for the fourth quarter and $10.7 billion for the full year 2024. John, how does this compare to last year?
While the revenue for Q4 increased slightly from $2.656 billion in Q4 2023, the full-year revenue also saw a rise from $10.334 billion in 2023. This growth is a positive indicator, although the adjusted operating income for Q4 decreased to $95 million from $111 million in the previous year, reflecting some challenges in profitability.
And what about the net income?
The adjusted net income for Q4 was $43 million, down from $54 million in Q4 2023. This decline is primarily due to increased costs and a significant goodwill impairment charge.
Debt reduction and strategic initiatives. Owens Minor has made significant strides in reducing its debt. Can you elaborate on this, John?
Absolutely. The company reduced its total debt by $244 million in 2024, capping a two-year total debt reduction of $647 million. This deleveraging effort provides financial flexibility for future strategic initiatives, such as the potential acquisition of Rotech.
And there's also news about a share repurchase program and a potential sale.
Yes, the board has authorized a share repurchase program of up to $100 million. Additionally, there are active discussions regarding the potential sale of their products and healthcare services segment, which could further streamline operations and focus on higher margin areas.
EPS forecast and analyst expectations. Analysts were forecasting an EPS of 53 for the quarter. How did Owens Minor perform in this regard?
Owens Minor reported an adjusted EPS of 55, slightly beating the forecast of 53 cents. This is a positive sign, especially considering the challenges faced during the quarter. The company is also guiding for double-digit adjusted EPS growth in 2025, which is encouraging for investors.
Operational efficiencies and future outlook. Looking ahead, what are the key operational efficiencies and future outlook for Owens Minor?
The company is focusing on improving its gross margin, which is expected to be between 20.75% and 21.25% for 2025. They are also projecting adjusted EBITDA in the range of $560 million to $590 million. A significant part of their strategy is to direct capital towards the patient direct segment, which is expected to drive higher growth and margins.
And how does the revenue guidance look for 2025?
They are forecasting revenue between $10.85 billion and $11.15 billion, which indicates a steady growth trajectory. The focus on high-margin segments and operational efficiencies should support this outlook.
Key takeaways. In summary, Owens Minor has shown resilience with a slight revenue increase and a successful EPS beat. Their strategic focus on debt reduction and high-margin segments positions them well for future growth. John, any final thoughts?
Owens Minor's commitment to deleveraging and strategic realignment is commendable. The potential sale of the P&HS segment and the share repurchase program are positive steps. Investors should keep an eye on their execution in the patient direct segment for long-term value.
Thank you, John, for your insights, and thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Owens Minor's performance in the comments below.